Hey everyone. Alright, I think we're good. Let's see, what's good on the Wallstreetbets side? There was see, is there anything good going on? Director of
Hi, Wallstreetbets. My name is Tara Stawinski. I'm the president and CEO of the Diane Fossey Gorilla Fund, and I was just made aware that you have been adopting gorillas through our website. And I just wanted to say thank you so much for this incredible support. In case you're not familiar with us, we are the world's largest and longest running organization that is fully dedicated to gorilla conservation. Every day, 365 days a year, we are in the field protecting the world's remaining gorillas and also helping the people who share their forest home. So thank you again so much for your support. It will go a long way in helping our important mission.
Well, that's super cool. It says it's live.
So thank you again.
Okay, cool. That's super cool. I don't work at the collaborator with the research. I was shocked to see all the support this morning. So it's 20K in donations this morning for people named Gamestop. She has no idea what Gamestop is. She asked me what was that big. I told her apes together strong. This is so just the way Wallstreetbets likes to do things. There was a lot of donations the first time. The first time GameStop went through the roof. Let me see. Trying to figure out something real quick. Just getting everything set up. Oh yeah, you know what we could do? We could chill. We could chill with some of that good free YouTube music. YouTube has the best free music. Whoa, that doesn't break people's eardrums, including mine. I apologize. It's a little loud. I think that'll work. Okay, that's better. Let's see. If we spell notepad right, we'll be doing a lot better off. Copy link address, actually. Let's see, let's go back to that stream. Pen. So there we go. Now we're pinned. We're ready to go. Let me see. Does this sound okay? Pin. Just checking the stream, making sure everything's good. There we go. Now we're pinned. We're ready to go. Let's see. Let me see. Does this sound okay? I know there's a account info. There's like a slider to make this private. And I'm just checking the stream, making sure everything's good. There we go. And we're ready to go. Let's see. Does this sound okay? All right. Okay, cool. Yeah. Well, I turned on privacy there, but you know, then I have this showing up, but it's not terrible. AMC really popped after hours. That's super interesting because it was based on. When did their earnings come out? Was it a couple days ago? Yeah. So they thought they were gonna lose 2.8, and they actually lost 3.1. But it was still okay, and I've read that it was because of revenue. So they actually had more sales than people expected from 2020, and the guy came out saying that they were going to be pretty good going into 2022. As long as things pick up a little bit, they're not going to have to like restructure debt. So that's good. I like this song a lot better. Let's see. But we don't need to dig into that yet. The coming Great Depression versus...
Will inflation lead to a massive disaster of a deleveraging collapse in the United States? That is, will inflation be so bad that we could potentially see mass bankruptcies at corporations and households and mass foreclosures in real estate, leading to a great reset solely because of the alternate path, where we're going to go between $1.9 trillion of stimulus-related debts, which we've already passed that bill, so I guess that expectation is now reality, and we're expected to potentially not only run a budget deficit in the country, but also add maybe another $3 trillion in infrastructure spending. This means
that's interesting. They're about to do a huge infrastructure bill as their next thing. Like, I think this is probably our maybe last stimulus thing. Now it's just going to be straight infrastructure is supposed to be the next bill that they're talking about. Infrastructure bill 2021. With COVID relief passed, Biden prepares to stake his presidency in Democratic majorities on infrastructure. So the next bill is going to be a huge $2 trillion carbon-free infrastructure plan. It's supposed to create millions of jobs. So that's going to be interesting. That's going to be Biden's wall, if you will. So, one way or the other, I'm not sure. Do not think of an infrastructure bill as just roads and bridges. Democrats view an infrastructure bill as infrastructure necessary to build the economy of the future. So that's probably going to be like tax credits for solar and maybe EV and stuff like that too. Spectacular infrastructure overhaul is his next policy. Disagreements among Democrats, the big labor unions, environmentalists, two key Democratic constituencies, jockey for top billing. Maybe some money towards converting some power plants over to solar and stuff like that. But yeah, I mean that's kind of the other way people like to dig out of recessions.
Beat the money printing that we did in 2020. And this is creating a lot of concerns. What direction are we all possibly going to head in? And is there even an alternate to what's coming? After all, used car prices are up 14%. Copper prices are up over 30%, all just within the last year. Lumber prices are up over 250%. Rent is up. Sure, things like apparel prices are down, but they're down by nominal amounts,
awesome.
like 2.5%. Everything else is skyrocketing. You go to a grocery store and somebody tells you there's no inflation, you just laugh. And have you seen the asset price inflation? The stock market? The housing market? Yet at the same time, the government's consumer price data shows that inflation is just 1.7% year over year, and up less than expected on a month-over-month basis. Are we just being duped? Is this data just a lie? After all, we know the CPI has been revised multiple times in the past. Is this potentially just being revised in a way that manipulates the data down to hide the nasty reality of the inflation that we really somewhere? And
Fred, financial report, cash on hand and in U.S. banks.
Drinking coffee, hide the nasty reality of the inflation that we really have.
What is
so
that?
I spent my Saturday morning drinking coffee and doing some research. I first wanted to start with some data. Where the heck is all of this money going? If you print all of this money, it has to go somewhere. And once we know where it is, maybe that can help us understand what might happen in the future. Okay, so here's what I found.
Maybe.
When I searched for where the frickin' money is, I realized that sectors, corporate sectors in information, retail, trade, and manufacturing and banking have way more cash than they ever have had before. In fact, if we just look at the last year, we'll see a massive rise, somewhere between 50 to 100% of an increase in the amount of cash firms have available. But it's not just firms. On average, the personal savings rate, and this doesn't mean everyone's savings rate, but it does mean on average, the personal savings rate is 2 to 3x the levels where we used to be. This is where we used to be. This is where we sit now. Substantially higher savings, substantially higher cash. Now, maybe that's because we're stuck in a pandemic and people are having trouble spending the freaking money. But we've also seen housing prices up 10 to 20%. We've seen the S&P and the Dow up 24 and 14% respectively over the last year and 3 months. So in other words, the money is flowing. All of this money printing that we're doing is leading to substantial increases in the amount of cash people have available. And this is leading to a lot of concerns that, wait a minute, all of this increase in money at some point is going to lead to inflation. How could it not lead to massive inflation? This is exactly where we get a divergence. We get two potential scenarios as to what could happen with inflation. And I'm sure there are potentially scenarios in between these two, but let's talk about the two scenarios. First, what society seems to believe right now, and second, what the Federal Reserve believes society really thinks. And this is where we could really go tinfoil hat in terms of what's happening. But let's go down the scenarios. Scenario number one. Since the velocity of money plummeted during the pandemic, or the rate at which money circulates because of shutdowns and restrictions, we've been able to save up money and hoard cash, and as soon as the reopening is in full swing again, that is, we're all going to be able to spend money again, we're in for massive inflation, as all of a sudden everybody goes out and spends money on products and services at the same time. We'll see supply shortages not just in semiconductors and houses and building materials and used cars, but in everything. Computers, phones, TV, clothing, household supplies, energy, everything. Some say we'll even revisit the days of the 1980s. We'll see 10 to 14% inflation again. Some say it won't be that bad. Some say it'll be like 4 to 5%. But yes, we will have enough inflation to lead the Fed to panic, forcing the Fed to jack up interest rates to combat high inflation, leading to variable rate loan costs skyrocketing, creating not only a skyrocketing in bond yields, but also likely leading to corporate and personal defaults, leading to foreclosures and variable rate backed real estate.
That's the scary thing about balloon loans and ARM loans would be if interest rates do rise, your payments are going to skyrocket. So let's see. And the treasury yield is kind of the big thing people keep talking about right now. And this is kind of the backbone to interest rates. So as the 10-year treasury yield goes up, interest rates go up. So that makes it harder to buy houses and stuff like that. And over in March, just for the last 12 days of March, we have seen it go from 1.45 to 1.64, which is actually a significant climb. And the big thing here is that it hasn't stopped climbing, and this is just raising interest rates, which should have downward pressure on real estate and stocks. So higher interest rates let you pay less for a house and stuff like that. It's not, and this is why Monday we had a bloodbath when it came to tech stocks, because tech is basically future profits. Most tech companies are valued based on how much money they'll make in 5 years. But how are they going to get to the 5-year point? They're going to borrow money to get there, and as interest rates get higher, it gets harder to borrow money, and that's why people started rotating out of tech, because the bond yields, or basically interest rates, are rising. And that's not... I feel like this is the scary monster in the room, because this isn't something that's going to easily reverse itself. We're not going to just turn around tomorrow and this reverses. And this is a product of investors believing inflation is happening. So they can't print their way out of inflation, so they're not going to be able to print their way out of higher interest rates. And that's the scariest thing to me. And I mean, that's kind of what he was mentioning there. But yeah, bond yields going up, interest rates going up, it being harder to borrow money, suddenly people aren't borrowing and spending, suddenly people have less money, bad things happen. That's kind of this path that we could be on.
Creating not only a skyrocketing in bond yields, but also likely leading to corporate and personal defaults, leading to foreclosures and variable rate backed real estate, as non-fixed borrowing costs end up destroying anyone or anything that is over leveraged. This could essentially lead to a Ray Dalio style Great Reset, where the economy goes through a painful deleveraging, where people either try to get out of debt by saving and paying down their debt, or through bankruptcy and screwing people who were owed that money. This could lead to ultimately a decade, potentially, of restricted spending, leading to an economy that spirals downward. And unfortunately, because inflation would be high, it would be very difficult for the Federal Reserve to actually print their way out of this, because the additional printing would just lead to the inflation, or lead to more inflation, which could literally lead to a collapse in any remaining trust of financial institutions, leading Bitcoin to $1 million, a dark depression, the likes of which we've never seen before. That would be so bad that even if we don't end up going into a dark depression, any degree of this could end up leading, or would end up leading, to some form of very dirty and nasty recession. That is one possible scenario.
Yeah.
And that is a scenario that a lot of people are deathly afraid of. In fact, some argue that, Kevin, what you just described is exactly why Bitcoin is skyrocketing. At the time of this filming, it is approximately $61,800, going straight up as I'm filming this video, possibly going to hit $62,000 before I even get a chance to post it.
That's absolutely crazy.
But then there's the Federal Reserve's argument. See, the Fed agrees we're going to see an explosion of spending as the economy reopens. However, the Fed believes that this explosion of spending won't last. For example, if all of a sudden there's an explosion of spending that leads to inflation in, let's say, airfare or computers or iPads, people will simply delay their travel or their purchases of goods or services, because those goods and services are in short supply, and rather than prices going up, people will just delay the purchases of those products until prices come down again. People will just delay travel to an overcrowded Disney, because who wants to be at Disney when it's overcrowded? Now, this is because the Fed believes that society, even though society doesn't realize it, the Fed believes society does not think prices will stay high for long. In other words, if society believes prices will go up, then even if things are overcrowded and even if products are in short supply, society will just continue to pay higher and higher prices and we'll have hyperinflation. But the Fed doesn't believe that. And this is a much more complicated argument. The Fed argues, no. People are just going to wait. People just won't pay those prices because people don't expect those prices to consistently stay high. And that any short-term spikes in inflation will just flatten out.
So that sounds crazy. Like, I'm trying to, like, think about this from my perspective. Like, do I agree with that? Like, would people just choose not to buy something because prices seem too high right now? And while that's not true for bread or milk, if you think about houses, I have some investor friends, and, like, I own some real estate, and I'm looking to buy another house, like, looking to buy another rental property, and I've just held off because house prices are so high right now that I'm like, I don't know about buying another house right now. And that's true for what he's saying here. Like, I'm literally like, house prices are too high, I'm going to wait. So while it sounds bizarre, I and some of my friends are doing exactly what he's saying here, where I'm just like holding off. When stocks get really high like they are right now, I'm not like, oh man, I want to buy in as hard as I can. I'm like, wait, I might just wait a little, let things cool off a bit. So when it's optional purchases, I think people are doing what he's saying here, and they're only buying, or they're waiting to buy in. Some things are going to get bought. People are still going to buy gas, even though oil prices are skyrocketing and stuff like that. But this is kind of what people are talking about with the bond yields, which, yeah, it's like the NASDAQ is the index with a ton of, or the most like tech stocks, and the NASDAQ is falling based on the bond yields, but it fell hard Monday and Tuesday, and then it recovered throughout the rest of the week. If we look at something like, let's see, Tesla. Tesla had an interesting week from my understanding. I haven't looked at the, yeah. Yeah, so actually it started probably last week, and then it recovered starting what is this, Wednesday? Tuesday. This is Tuesday. Okay. Hold on. I've got it's showing after hours, and that's confusing me. Okay, so let's drop the after hours. So Tuesday, yeah, it started the recovery on Tuesday. Monday was bad, and last week was bad. So just this is basically the only thing people were reacting to, and people buying stocks, were the bond yields increasing, interest rates increasing, so they were selling off tech stocks, and it was just not good. And then this week, the stimulus passed and all of that, and that's really, really helped. And that's Tesla, but if you look at some other stuff like AMD, which makes makes graphics cards, which is also tech related, and I don't see it in my. There it is. I'm blind. Yeah, AMD looks very, very similar. It had this huge sell off, and that's just kind of we don't want to make an order. Yeah. Last week was really bad. This week has been all recovery. So everything smells like roses right now, but as you can tell from these bond yields, like the big scary monster they were running from last week is still here, and it's just getting scarier. Interest rates are just going up, and that makes it harder to borrow money to buy stocks with. That makes it harder to borrow money to buy houses with. So hopefully we'll see a pullback in house prices, and we'll see I mean, take it what you will. Some people don't want to see a pullback, but that's kind of what the Fed is betting on, is people will be like, hey, let's chill out with this buying.
It's kind of like how people say, gosh, housing prices are so expensive right now, I'm just going to wait. Well, the same could
That's
happen
literally
with
what I said.
products, goods, and services. Rather than pay more money, people will just choose to wait. It's kind of like what happened when there were gas shortages. Now, this gets complicated, and we're not going to go down into the world of gas shortages, but what happened when there were gas shortages? Prices went up.
Hold on. Speaking of that, oil. I heard oil has just been off the charts. I haven't looked of late. 1 year. Yeah. Oil prices have just been killing it. Let's see. It would be the Louisiana Light. Jesus. Okay. I just wanted the little thing. I'm not going to spend all day on stinking oil prices. But yeah, oil prices are going up and up. So that's gonna be a thing. Gas prices have been rising. We're gonna just something else to deal with as a consumer.
And people had to pay with their time. Now, because they needed gas, they also had to pay the higher prices, right? You don't have a choice not to get gas. But people end up paying with their time. When prices go up and there are shortages, people pay with their time. And
Do you
that
mean
same
riding a
thing
bike?
can happen again. Except people won't be forced to travel or buy goods and services. And so when they pay with their time, they'll just delay gratification. And we won't actually see that inflation.
Oh, he
In
just
other
means
words,
wait.
price increases will be temporary. And the Fed believes that as long as society truly thinks that these price increases will be temporary, there will not actually be inflation. Now, this is bizarre because what this does is it actually takes society and uses society believing that prices won't stay high as a tool for legitimizing all of the money printing that has happened. All of the crazy money printing will just get legitimized. This massive transfer of wealth we've seen from poor people to the rich, where the rich have gotten richer, people owning assets, stocks, real estate, and businesses getting richer and everybody else getting screwed, will be legitimized as everybody else gets left behind. But it's the course, like this craziness is literally the course the Fed believes will be reality. The Fed believes, let's let inflation spike to 2.5 to 3%. It's not going to go much higher, and even if it does, we'll handle it, they say. But after this minor surge, we expect inflation will settle back down, hopefully to 2%. And that'll be a success for us. And we'll slowly get back to normal policy like we had maybe in 2016,
It's a really
17,
good
and 18.
Meet Kevin video.
Those in scenario 1 say, dude, no, this is impossible. Anytime countries have printed massive amounts of money like this, all they've accomplished was the massive dilution of the people's currency and ultimately leading to the collapse of fiat. Think of Zimbabwe. Think of the wheelbarrows of money in the Weimar Republic. But those in scenario number 2 say, not quite. Inflation isn't actually related to money printing. Remember, inflation is the increase in consumer prices year over year. Inflation actually happens when people lose trust in their government, those in scenario number 2 say. Not because of uncontrolled spending, ironically. Now, when...
So the point of inflation is actually people losing trust in their government. That's kind of interesting because the 10-year, the bond yields, which is what's driving interest rates up, this is actually because the economy is recovering and we're getting to the point where we have vaccinations and stuff. People are expecting a recovery, and that expectation of success from our government and our country and our economy is what's driving these yield prices up. And that's why people are worried about this, because as we get more vaccines rolled out and things like that, the yield prices are going to go up and interest rates are going to keep going up. And there's not really, it's not like the economy is going to get less vaccinations. The coronavirus is going to become worse or something. Like, we're only going to recover more and more as days go by, and interest rates aren't going to keep going down. So this is kind of a rising problem that there's not going to be a simple solution for. I mean, it's not going to just like curve off. So I don't know. Like, I feel like that is going to be an issue.
Scenario number 2 say. Not because of uncontrolled spending, ironically. Now, when a country like Zimbabwe loses control of inflation...
Oh, yeah, that's one other thing. Okay, so he's talking about that. Basically, like... But that would be like the US dollar versus like the yen or something. Like, US dollar versus other currencies. And honestly, the dollar is suddenly worth like more. It's doing better against other currencies as opposed to worse, which is kind of interesting. Let's see, the euro. 0.8 euros per dollar now, and it used to be 0.9 euros per dollar. Like, the dollar is getting stronger instead of weaker. And that's its own set of problems, because then that means it's harder for us to sell exports to other countries. But that still, I mean, while that's an issue, it's not as big of an issue as inflation or hyperinflation and people not like relying on the dollar. So, I mean, it doesn't sound like we're going to see wheelbarrows full of dollars not being worth anything. It sounds like the dollar is being more valuable than, it sounds like the dollar is just becoming more valuable.
How's it going?
What's this fool up to now?
The crash. So we had one heck of a crash here in the last few weeks. And I always like to review the stuff I bought. I send alerts so when I review...
Let's skip your intro.
This crash is I really looked at companies that I thought sold off over 30% because I thought they were going to rebound very quickly. These are also within my high conviction group. So, for example, I might have very high conviction on Apple, but Apple sold off maybe like 13, 14%. I mean, it's kind of like, okay, the S&P sold off.
Apple's not super exciting.
At a low. Am I really going to add to the S&P at a 4% decline? Or Apple at a 14% decline when I can go pick up deals for 33% off? It's kind of like when you go to
but he's going to name off a bunch of super risky
in my
stocks.
high conviction names, the times that we have clearance on some of these stocks, first I'm going to tell and
fill out the sheet. What do we got here?
Into company.
Oh!
Let's hit the, there we go. Oh, there we go. The first thing I bought was Airbnb. I threw $19K into this. So Airbnb is not a company that I've gone really, really deep yet on fundamentals here. I did an analysis pre-IPO.
Airbnb. All right. I like Airbnb. I'm holding Airbnb. Not a whole lot. Not as much as him. But yeah. Definitely like Airbnb. It definitely took a hard dip. Oh, I didn't notice it was over 200. I knew it was up and I was happy about it, but I didn't know it was that far up. I was definitely not happy when it was down here in the 160s. I was questioning my life decisions. Airbnb actually recently IPO'd. I still have a drawing here from when I was trading Airbnb previously. It came out. It dropped to 120. I bought in somewhere in the 140-ish range, and then, it just kind of kept running, and we're kind of here. I don't really know where it goes from here. I don't see any reason it would just fall back off, but I guess that gets into some kind of support levels. Yeah, I feel like it just hasn't finished telling the story. Oh yeah, let's look at that, the RSI. Yeah, I mean we're not even like hitting the top here as far as the RSI indicator goes. How did the earnings come out? -9 versus -11. Yeah, I mean it was another one of those like AMC style things where we knew it wasn't going to be good because they don't excel during a pandemic. But it's a recovery stock too, which is what's kind of interesting about it. It's a recovery stock and a tech stock.
I thought,
but yeah,
hey, you know,
so I like
I
Airbnb.
might want to wait this one
like
out.
Airbnb.
I want to see how the winter quarter goes before I consider going heavier on this one. Airbnb crushed it. Absolutely dominated earnings. So I put a little bit of money into this one. Sometimes I put...
Dominated earnings. Wait. What? Airbnb. I have it selected. It's there. It's there. -9 was the estimate, and they lost 11. Airbnb shares are trading higher amid strength. Yeah, record. Trading higher. Come on, talk about earnings, because I have a feeling that's not actually what happens. Like, yeah, the post-COVID travel boom could be a scud. Airbnb seeks to raise $2 billion. Offer $2 billion convertible notes. Oh, come on. Okay. I wanted a news thing to back it up, but really, I'm just like... But really, I mean, he's saying that they crushed earnings, but they actually didn't crush earnings. He really isn't looking at fundamentals. I think he's looking at just the chart. Like, earnings came out and then it shot up, so that means they crushed it. But they definitely didn't beat the estimates. But I think Airbnb is an interesting company
money
anyway.
into companies as a way to get these on my radar, so that way I can start doing my fundamental deep dive, because I am like a squirrel and it's pretty bad if I'm not invested in the company. I guess the smallest position that was really added during this crazy period of time. Shift, love this company. I've added a chunk of money to this one. I've really built this position out. I don't want to go crazy
AMC
on this position because
based.
we're waiting on Wall Street to actually realize this company is a...
Okay. Well, all I've heard so far about AMC are good things. I'm personally a fan of AMC. I have some AMC, so I'm happy about how this week went. But what did we have news-wise? Something that was interesting was the after hours. Hold on. Let me equities. Where options extended. Yeah. We had this pop Friday. That did not just convert. Equities. Yeah, I was like, I hit okay. Yeah. So after hours, we had this huge jump. I'm not 100% sure why this jumped, but the talk on the street for AMC has been really good. I'm here. I know this is gonna sound bad, but I mean, I'm hearing about people getting their stimulus checks already, being direct deposited and stuff. And let's be honest, this is mainly being retail traded, and those people having access to stimulus is gonna help AMC a good bit. Yeah, my position in AMC is probably like $600-ish. Whatever, who cares? Where's AMC? Let's see. I've got 80 shares, so you've probably made you say, yeah. But yeah, AMC has been pretty good so far. I can hook you up with my like. I don't have a Discord for the channel, which is an interesting idea. Let me see. Creating a server you agree to. You know what? Just on that, I'm gonna make a Discord server just for this channel, but then that'll make it easy for me to invite you. Okay, the image is gonna be. I'll change the logo later. Invite your friends. Send them an invite. Use copy button. Copied. Okay, let's see. Now let's go over to chat. I will. And you will be the first person to join this Discord. That I'll build it out later when I'm not streaming. But yeah. Sweet. Who doesn't love Discord? Right? I hate when I talk to new people and I'm like, hey, yeah, do you have a Discord? And they're like, what's Discord? And I'm just like, oh man, this is gonna be a long conversation. All right, do you have a Facebook? I guess, or like, should I just call you? I don't even know what to do. So are you Canadian? Okay, yeah, I've got a bunch of friends that are Canadian. The recent freeze, I mean, this isn't stocks, but like the recent freeze was not good to them. Like they were complaining about that. I mean, I had pipes burst, and I live in Florida. I have some rental properties in Mississippi, and that was where I had pipes burst. It didn't quite freeze here in Florida, but in Mississippi it did, and that sucked. And then my friends in Canada were like, I think it was like -30 there. It was some ridiculous number. But yeah, the ice storm that came through though recently was not good. But yeah, I mean, AMC has been absolutely killing it. I was super happy about that because I was just kind of holding, and I thought AMC was more. I liked AMC more than GameStop. I mean, obviously GameStop probably has won out percentage-wise over the past couple weeks, but I was looking at like long-term on AMC. I mean, like in 2019, I think that's when this is. 2010. What is this? This is weeks, 3 year. Yeah, going back like 3 years. Just 13 up to $20. Like it's a recovery stock and it's a meme stock, but like I just like that. We can yeah, here it is. Silly. It's a I don't know. Yeah, I just definitely see potential here, especially after we've had like, what about Wallstreetbets? Yeah. WSB being good old Wallstreetbets, like subreddit. It's insane. Now it's getting picked up. Yeah, so I've noticed a lot more people talk. I'm in a bunch of like Facebook groups for Wallstreetbets, which I don't recommend, but I'll be honest, like I post a bunch of I'll find something that's interesting in Wallstreetbets. It'll be like some of these what is this? Okay, not this. This is just basically saying CNBC is trying to say how short sellers help the stock market, which there's a thing to be said about like providing liquidity. When everybody has bought the stock and they're holding, people can sell short to effectively create shares and all this. But now the video I was working on was about CNBC saying that is doing better. Basically, I'll find videos like this where this guy is saying like CNBC is saying that the Wallstreetbets community is doing better financial analysis than a hedge fund, or than hedge funds actually, and then I'll add to it, like, for example, for the video I'm going to release tomorrow, it has this video in it, which is about a minute long, and then I also had another video from Wallstreetbets where a dude's literally eating a crayon, and then another post that I show where somebody had done some due diligence on United Wholesale Mortgage, and and it was, like, really well done. And I'm like, I love that there's a community where you have somebody digging deep into a stock and showing like a really good analysis, and then you've got another dude eating a crayon. And I'm like, yes, CNBC, you're right. It is better than a hedge fund.
I think recently you're seeing a really interesting shift where people on Reddit are not just YOLOing it. Obviously, they may post things on Twitter, but there are some individuals that are providing some really advanced analysis on some of these stocks. We see people on Reddit talking about LTV CAC ratios, or they're using product pricing to project sales. And some of this analysis is a lot better than what we've seen from hedge funds, frankly. So you're seeing kind of that rotation into, let's say, out of stocks like GameStop, but into, let's say, tech, which we are seeing a lot of movement for some of the big tech names, especially after the most recent correction. And I think it's going to be fascinating how this plays out, right? You have amateurish investors who are learning finance, and you have people who know finance really well, professionals who are trying to innovate.
Oh, AMC actually did better than GameStop, at least when this was, which this was posted. Yeah, so I'm assuming this was like Friday. Dude, that would be awesome. Like, I really hope it does. I think AMC has a lot of potential. Personally, I'm holding, I've got AMC, and then I'm also in Carnival. I bought into Carnival around the 21. Like, I've bought and sold some, so I was in Carnival earlier, and I keep doing this. That's one of my, like, things that I've been doing, that I've been working on. It's just buying and then selling, and then buying back in, because I shouldn't have sold in the first place, if that makes sense. But I'm holding Carnival and American Airlines and AMC. Those are my 3 recovery stocks. So I'm just like, it was kind of funny to me that like AMC is this whole Wallstreetbets play, but I'm also like, oh yeah, it totally fits in my like recovery stock portfolio to try to balance out with the tech stocks that I'm holding. Oh yeah, and I love these bangs, dude. These things are super awesome. I used to drink Monsters, but they didn't really do anything for me anymore, and so I started drinking these. Yeah, I think that, and that was another, like, rotating into things that I liked, as opposed to just kind of playing whatever stock. Because I'm in some Discord groups that are all about trading stocks or whatever, and they just name off a lot of random stuff. Like, CCIV was one that got super popular. Was it Ride was another one? Like, they were just super pumping up Ride as a thing, and then it just, like, fell off. Yeah, like, I get to try for the squeeze and also get the recovery. I'm just like, it's a win-win. Like, I really like AMC as a thing. I definitely should have put in more. Oh, actually, part of, yeah, it's like I rotated a little out and into United Wholesale when it was up like 14%. It was let's see, it was somewhere, I want to say in the 10.6-ish range. I saw it up 14% and was like, so I pulled some and put into United Wholesale Mortgage, which, not feeling great about that right now, but I think long term that wouldn't be a terrible idea. I was just reading about it and was like, this seems like a pretty good idea. Doesn't fully pan out, the post recovery price will be, yeah, like, that's the thing. So if the whole AMC thing doesn't pan out, I can long term hold that and not feel bad about it. Like, eventually it's gonna go, like, movie theaters are not gonna go away. Like, everybody's all about the the pandemic's gonna kill movie theaters, but like, honestly, if I had, like, once the majority of people are vaccinated and I get a vaccine, I'm gonna go back to the movies. Like, it's an experience. It's not the, yes, I could just watch the movie on some streaming platform, but there's just something about going to the movies. Like, yeah, even if that's a thing. Hold on. Let's get some of this free YouTube music here. YouTube Studio. Let's see. Carnival's good. Where? We're just trying to go to the audio library. Whoa, I'm sorry. That is loud. Did we have to start that loud? There we go. Okay, that should be tolerable now. Yeah, my American Airlines thing is actually an option instead of just holding the stock. I'm holding a $20 call for December, and it's currently up pretty good, so I'm happy about that. And honestly, I could see that recovering a lot more than it has right now. Not based on the 180 days, that's for sure. But I mean, yeah, I'm like, how's this? And like, I've got a pilot friend too who said he works for JetBlue, and he's like, they're talking about hiring come the end of 2021. So I'm like, I'm pretty sure, nice. Getting the homework done, man. That's what's up. Definitely good being a uni student. RIP. Yeah, been there, done that. I'm a software developer. I went college to get the what is that damn thing called? Brain not working. Yeah, I had to go to college. That sucked. Computer science. Yeah, that word. Yeah. That was an experience, but I'm so happy to be out of college, and I've had the job I have now for like 10 years as a software dev, and just like can't wait for Monday. Yeah, I know, it's kind of funny. Like I both dread Monday because work, and I'm also like excited for where the stock goes. Man, Ride took a beating. Like, people were so into this, and these SPACs are so dangerous. And it's basically an EV company, like an electric vehicle company merged with effectively a SPAC, which is like a money fund to get traded without having to IPO. And then it gets pumped up by the whole like pump and dump community, and you end up with something that's sweet. Yeah, you end up with something that's super risky, and yeah, falls 16% in a day. But yeah, I mean, software dev is where it's at. I mean, I grew up like super poor, so I was like, man, what can I do to make money? And like, I got a hold of a computer and loved programming, and I was like, I can create stuff with nothing. Like, yeah, so I just started building applications, and yep, eventually went to school for it and then got a job doing it, and I get to work from home, which is super cool. And then I have like 6 rental properties now, so like I started investing in real estate because before I moved to Florida, I lived in Mississippi, and I bought a bunch of rental properties there because properties are really cheap, and just kind of took advantage of that. I got to work from home, so I had free time to go do this stuff, and now I've started like playing with the stock market. But really my big thing has been investing in real estate, and it's been a good like 8 to 10 year run. Nice. Like electrical engineering and such, kind of more dealing with circuitry than that. Yeah, stocks are pretty much free money. Like the coolest thing I've ran across would be selling covered calls. And I've got 2 calls on Flint that I've sold. So I don't know if you know how that works, but if you hold 100 shares of something, and so you hold 100 shares, and then you sell the right for someone to buy them at a strike price. So I've sold the right for these people to buy my shares at $10 a share. And that ends in, I rolled this one. So like on March 19th, this guy could buy these at $10 a share. But right now it's at like $7. Or no, that was my trade price. What is Flint at right now? Yeah, right now Flint's at $6.60. And this person paid me, view trades. This person paid me $83 for the right to buy it if it goes over $10. And if it doesn't go over $10 by March 19th, I just keep the $80. So I'm going to hold the 100 Flint either way, and then I just make money off of that. I basically sold off any upside above $10, but there's a long way between $6 and $10. And if it did get taken away, like, I would be happy with that. But yeah, basically you just hold stock and then you sell a call every month, and you can collect, like, I think I made about 10%, because I think I bought this when I bought these 100 at 7. So yeah, I bought in at like $7 a share. So I paid $700 for the 100 shares, and then I turned around and sold a call for $80. So I made like 11 or 12% on that, and it's probably going to expire worthless. So I just get to keep that money, and then you do that over and over again, and you just collect money every month. That's kind of what I'm getting into, but the tough thing is I like stocks like Airbnb also, and it's really expensive to have 100 Airbnb. Like, so you kind of have to pick cheaper stocks, which comes with a lot more risk, but it's interesting. Yeah, and I wanted to make some videos on stock trading and stuff. Like, there are videos out there, but a lot of them are super boring and dry, or they're very long and convoluted. It's kind of like a short and quick thing. But I don't know, like, I've started on that process, and eventually I'm going to go down that road. I wanted to do a foundation. That was the original thing. I was like, okay, well, this is the different types of buy options. Like, if you go to like AMC and you're like, I want to buy. So like, it starts off with like a limit order where you're not going to pay over $11.35, and you talk about like, okay, with a limit order, it's not going to go over $11.35, but then if the price jumps to $11.40 and you want to buy and you still wanted it to execute, it doesn't work that way. But you can make a market order and just get in. So market orders are for like time, like, hey, I want to get in right now or out. And then limit orders are for price more than time. Like, limit is basically saying, I don't care about the time, I care about the price. And then when you talk about like a stop order, stop limit? Yeah, you can do stop limit, you can do a stop. So like, your stop's going to execute at a strike price, and then just run on the market price. So basically, hey, now's the time to get out. And then you're not guaranteed what price you sell at. You're just guaranteed to get out at this time. Or you can do a stop limit where you choose the price you sell at, and this is when it triggers, and then this is what you sell at, or this is a buy order, but yeah, so this is when it triggers, and then this is what you're going to sell at. But it might not execute if nobody's willing to buy at that price. So then you're like, okay, well, let's just do a stop that triggers here, and then it sells at any type. Yeah, where are all these other options for limit and whatnot? And it totally depends on your, like, the interface for whatever you're using. Like, this is the Thinkorswim platform. I use TD Ameritrade. This isn't full screen. There we go. I use TD Ameritrade, and this is the Thinkorswim platform. Most of them will allow you to change it around. I do some trading on my phone, and the phone app lets you do it too. I used to use Robinhood. You can change it on Robinhood too. But like, you can really, especially with options, if you're like, if you were to try to make a, like, you wanted to buy or sell an option for AMC, if you go to buy an option, yeah, I mean, it's the same exact thing as buying the stock, but now we're buying an option. And the problem with options is there's a lot of people selling the stock, so your market order will probably get the same price that you're expecting. but there might not be that many people selling the option, and you could end up with your price may be way off, basically. So you could end up paying a lot more, paying a lot more, or if you're selling, getting a lot less than you expected. Because when there's only one buyer out there, that buyer may have it at like $3 instead of $1.20. And the way this would work is it's $1.20 per share, so it'd be like $120. What does this say? Yeah, so it's $120 plus their commission, or regulatory fee. And then they do charge 65 cents on TD Ameritrade to trade options. I don't think there's anything for buying stocks though. Let's see. Do cost of trade, yeah. So buying stocks is free like everywhere else, but options have a 65-cent charge on Thinkorswim. So that's kind of, or not Thinkorswim, but TD Ameritrade. What I hate how I will play a song in the YouTube thing, like YouTube music, and after the first one it'll stop playing. Let's pop back over to the audio library and start something. I'm sorry, that was loud. I super apologize. TD Ameritrade is a way to go in the US. In Canada, I'm using TD Direct Investing, so many commission fees per trade, so I traded big, $10 per trade. Man, that sucks. Man, I remember I used to be with Scott Trade, and it was like $7.99. Yeah, it was like $7.99 a trade. And that's going in and then going out, so you're out like $15 in my case, or $20 in your case. And it just really stinks to have to pay that much to get in and out, so you do have to do really big positions. That's definitely a thing. I use Coinbase for crypto. I don't have a whole lot in crypto, and I know that Coinbase is frowned upon or whatnot. Yeah, it's like $1,200. But they charge. Let's see. Is it gonna say? Wait. Let me do this on here just in case. Yeah, okay. They charge like $2.99 for a trade. So it's like I definitely only make a couple of trades and make them bigger instead of making lots of them. So you would not want to, you wouldn't want to day trade in something that gives you a fee unless you were pushing really, really big numbers again, I guess. Like the numbers you can outweigh it, but at the end of the day, that just sucks. It's nicer to have free trades. Although, obviously, as we've seen, free trades come with a caveat. When you look into Robinhood and how they're selling the order flow to Citadel and that whole thing where, it's free trades, but they're making money off of your trades. You're getting crappier execution prices as, in exchange for that. Wallstreetbets has gone full gorillas. Jesus Christ. This is ridiculous. It's super good though. I mean, it's ridiculous in a wholesome way. They're all adopting gorillas. That's absolutely amazing. I showed that first clip, where basically CNBC is like, hey, Wallstreetbets is doing better due diligence than, Wallstreetbets is doing better due diligence than hedge funds, which is funny. And it's funny to me because you get videos like this, where this guy's literally eating a crayon. Hold on, before I show this, I'm going to show the context. Where's it at? Nope, that's where he made gains, which he made like $1,000. I'd eat a crayon for $1,000. He made this bet that's like $250. End of day for GameStop, and I'll eat a green crayon, and then it hit it in after hour. Well, here, I'll let him tell it. It's not very long, but it's funny.
By 250 end of day, I meant end of trading, but fuck it, it hit 250 in after hours, and I'm drunk, and I've got a green crayon.
I think Especially with keeping the stimuluses.
It's kind of gross. Oh God.
I know Mr. Digit. He looks like he eats crayons often. That's terrible. Well, wait, yeah. Hold on, I will finish.
That was White Claw, baby.
Yeah. Man, stick to his bets. Let's see. There was a comment where they pointed out, that's not your first crayon, is it? That's pretty much your comment. Man, somebody was basically like, people normally post their bets and don't actually follow up on it. This man followed up on his bet and didn't even post it. And then later, like, yeah, he posted it in the comments, but the other person didn't see it. But, like, that dude was like, I'm committed to my bet that nobody even took me up on. Yeah, right? Oh, man. What is this? Ape Strong. How do you even... I gotta think that shopped, right? Yeah. I'm just gonna assume that shopped, because, like, how do you get access to this? Well, I guess they could just... People paid for billboards, so anything's possible. AMC feed repost. AMC entertainment until the newer people you have joined the battlefield. For months, there's one by there. Okay, this is just not information. Yeah, okay, it's just silly. It must suck to own AMC and watch GME every day. No? No? That's an 8, and that's a 1. So, I mean, I'm fine with holding AMC. Let's see, yeah. I don't know about shares now. LFG to Pluto. I don't want to be negative, but that's what I would like to point out to that guy is, yeah, AMC's up a lot more Friday than GME is. I want both of them to go to the moon, but... And, oh yeah, what I was going to say, I'm in a bunch of silly, like, Wallstreetbets Facebook groups that are pretty much just clones that, for the sake of, like, posting my videos and stuff. And when I find funny things like guys eating crayons and CNBC saying guys eating crayons are doing great due diligence. And in those groups, I've seen AMC mentioned a lot lately. Like, it seems like people are seeing how high GameStop is. And this thing kind of happens. It happens in crypto where people are like, man, Bitcoin is too high for me to buy into. So then you buy into altcoins instead. I feel like that's happening where GameStop is the big thing, and people are saying, you know, GameStop's too high now. I'm gonna start buying into AMC, and like AMC's talk is getting a lot. Like I'm seeing AMC a lot more in all the different Wallstreetbet communities, and that kind of makes me think, you know, as these stimulus checks roll out, we may see a jump, at least short term. Man, Wallstreetbets saved GameStop. Just saying, like, I know it was kind of a thing with Chewy coming in, or the ex-CEO of Chewy, whatever, Cohen, coming in and changing it over to a tech company and all that, but Wallstreetbets made a huge deal in that. Like, it just kind of motivated them, I guess, and allowed them the potential. Because right now they could make tons of financial moves that they could utilize that huge stock price, at least borrowing against it and such, to invest in the company. I made $14 million a year finally putting Friday. Jesus Christ. That's the other side of Wallstreetbets where you're just like, holy cow, you people and your money. Options are something else, man. Yeah. This show continues. No, about the dip. That's the other thing. I feel like the longer you stay in, Like the longer I stay in the market, the more I see these dips and see the rise afterwards, and you start getting less scared when things go bad. Like you see that, because like I saw that big dip that was Monday when tech was just selling off like crazy, and your natural reaction is to be like, I want to sell, but like I was like, wait, and I transferred more money and like bought more, which sounds absurd, but then, you know, like Tuesday and Wednesday came around and everything ran up, and it was the right decision, but it goes against your natural instinct. So it's just kind of like the more you're in the market and you get used to these cycles, the better advantage you can take of it. So that's definitely a thing. You want to be around for longer. Like the big problem that people have, especially like old school Wallstreetbets, is like getting in and throwing all of your money at one thing, or like an option that. So the risk with options is, for instance, I bought an option on American Airlines, and yeah, that option has a lot more potential for gains than just buying the underlying stock. But if the price of American Airlines goes under $20 by December, that option is literally worthless. If I would have bought American Airlines, it would still be worth like whatever, say it's $10 a share, it would still be worth $10, or 100 times 10, because options are 100. But the option would literally be worthless. So people will blow up their accounts buying options, and then they never get used to the ups and downs of the market. They just get in, go down, and then get out and quit, and just go like push shovels or whatever for the rest of their lives. But I feel like you need to ride the waves a few times to really take advantage of it. So it's definitely interesting. Up 203K mostly on you with some AMC on the side. Man, we're like a side dish. One day we'll be like the main 230K. Yeah, like holding here, that's incredible. But that's the result of holding. Like that's tough. OPEX 312 warning gamma decrease. Yeah, and everyone's on about this gamma squeeze. Yeah, I think this goes to that point where they're like Wallstreetbets due diligence. WSB GME gamma squeeze calculator update. That's a really high res photo. It's probably pretty much a self portrait of this guy. But yeah, let's see. Gamestop. There's a carnival at support wise. We're definitely above the 1 year. What about the 3 year weekly? I really, until we get in the 40s, wouldn't want to sell. As far as we can go, well, we can go 20 year, I guess, if we really wanted to. It's like 50 cents a share, $2 a share. 40. Okay, dividends. Oh yeah, they used to pay dividends. RIP. $2.60, and then down to -2. So like lost $3, lost $2, lost a little less than $2. Like I feel like they're gonna. Oh, when is earnings? 4/1, April 1st. Okay. But like they could keep continuing to lose less money, which is great. That's the road to profitability again. But like until, yeah, I feel like that could double. I'm happy about that. Ford has been killing it too. I had bought some Ford around like $7, and now it's on up like $13 plus. I'm not holding it anymore. I wish I still was, but I rotated out of it. I wanted to get into selling covered calls, and Ford. So like when you're selling covered calls or like selling call options, basically, a lot of the price that goes into those is based on volatility, and until recently, Ford hasn't been a very volatile stock. So like if you, let's see, nope. Let's see, is it trade Ford options? So if we were to buy Ford today at $13 a share, so we buy 100 of those, 13, so like $1,300. This is not gonna. Why is this not working? Yeah. I just want to make sure I can do the division later. Okay, so if I were to sell the 13th, April 13th-ish, April 9th, that'll work. That's almost a month. If you sell hold on, audio library. Let's go to another song. Musical song. Not the yield. Here. Nope. I lost my calculator. There we go. Oh yeah, I don't need to do all that. So you would get paid 70 cents per, and this is like completely at the money. So at 13.5, and say I pay 13.37. 0.7 divided by 13.37. So you're paying $13.30 a share, and you're getting paid 0.7 per share, or 70 cents per share to sell the option. So you're gonna make 5% if you buy 100 options of, you buy 100 shares of Ford, and then you sell a call option for April 9th. You make 5% on that, which isn't bad. It used to be like 1 to 2%. Ford has really increased their volatility as it has ran up. Which also, I mean, it's gotten a lot more risky now. And with the whole chip shortages, they're talking about not being able to sell vehicles because of chip shortages. Yeah, chip shortages. Words. Anyways, so if they end up not being able to sell vehicles, that could hurt Ford. Even if it doesn't actually hurt them in the long term, investors may get scared, and that would be an issue. So I would just say it's gotten a lot more risky, but as a result, you can actually make a decent return selling Ford call options. I guess we'll definitely see there. Correction to Ford board article. Ford nominates 2 Ford family heirs to its board. Yeah, Ford going into the electric vehicle space is what's going to really send them off. Man, this Gamestop stuff. Let's look at this 180 day. What's up? Let's see, 4 hour, 10 day. Like volatility and such. Let's drop the after hours. Okay. Nope, that didn't work. Send it. I hit OK. Wait, did I not go to equities? Oh, I went to options. That was what I probably did the first time I did that too. 20 day. No. 180? Yeah. I wanted to get that in there. Looking at these volume levels, like, that was a huge volume spike versus now. This run up is, not to, talk bad about it or anything. This run-up is substantially lower volume than this run-up was. So that's kind of interesting, honestly. But with lower volume, they were able to get this much price movement out. So that means there's a lot more potential that can be invested in it. But I think it's more fundamental based and less just straight buying pressure. People are actually starting to believe it's worth more, as opposed to here, it was just there weren't shares to be bought at reasonable prices, so it jumped. So I think this is healthier because it's lower volume, even though that's kind of counterintuitive. I could see it sustaining a little better, but that's just my opinion. Man, that last run up was $20. That would be awesome. I mean, I could definitely, I'm sure a lot of people were worried about the earnings that were coming out, like, and you see this run up after earnings. So I'm like, I feel like people were scared of it, and now earnings are out, so they don't have to be scared of earnings anymore. And then they're going to see this history, and I feel like that could help. That could definitely help. Where are we at? Okay. Let's snake on the beach. I like this one. Yeah, let's see what else Kevin's in. Let's see what else Kevin's in.
To Vroom, Carvana, it's in the used car business.
Okay, I'll pause.
Online used car selling. It's ridiculous. Anyway, love the stock. I did put a little bit more in during the latest madness. Xpeng. So you might have seen earlier I showed my Weeble with a bunch of these sales that I was doing in an earlier video that I showed, and I posted, obviously, I talked about these sales back in March 16th. I talked about them on the public channel.
It's really nice to have someone to talk to.
Broadly,
honestly. It's hard to sit here and like try to come up with something to do or say when I don't have anybody chatting. I actually did sell Xpeng. I think it was somewhere around like $46 or something like that. Yeah.
I bought back into this at like $32, which is maybe it was $33. But anyway, really awesome. Put 30K in.
Yeah, I mean,
this is a good one. This is a high conviction name for me. So now we're going to start seeing conviction really start going up here. So Xpeng, love it. Redfin, very high conviction name. $43,000 into Redfin. I've got over probably now 1.3.
I don't know how I feel about Redfin. Like, as a company, I'm in, like, I frequent, like, r/real estate and just real estate investing, and Redfin is kind of frowned upon. Like, the agents that Redfin has are usually, like, the lowest of the low, and the quality of service is awful. So, like, while they're trying to basically bring tech to the real estate market, they're doing it in a very shotgun approach. They're having to restructure their model to the old real estate model, taking a percentage of sales and blah, blah, blah to try to make any money. I don't know why he's so bullish on Redfin. I'm just like, it seems like a crappy company. Like, maybe their numbers are good, but their outward appearance just isn't. So I'm like, that's weird. I'm going to listen to this Redfin thing again.
Here. So Xpeng, love it. Redfin, very high conviction name. $43,000 into Redfin. I've got over probably now 1.3, 1.4 in this stock. It's a lot in the stock. A lot of that being gains. They've been riding this one for a while, and it's just done very, very well.
That makes sense.
So I'm very happy about
If he's just been, like, lucky riding Redfin, I could see him being super happy. But, like, if I just picked Redfin up off a shelf, I wouldn't be a fan.
But I did add on the dip to Redfin. I did add to API. Now, API I'm actually a little bit upside down on. I bought this one from the dip from what was really high, but this one definitely kept dipping, and it is still a little bit upside down. I think I got this one at $72. But API is that infrastructure behind Clubhouse, and API is not really in the media right now. It's kind of fallen. Really,
he's a big Clubhouse fan.
I try, and I don't want to. Y'all know I love Etsy. Etsy's advertising model is Etsy. Y'all know I love Etsy. Etsy's advertising model is
I don't know anything
awesome.
About their fundamentals.
They share the advertising costs for their business with the sellers when their
I
products
at least know
sell
it's a good
through the
company.
ads.
So
it's a brilliant. They give it like $16. This company has so much more potential. FRX. All right, so Mike's Fitness. This one had so much freaking media hype. I think intraday it hit like $16 a few weeks ago. This had
What is this? FRX. 1171. Ford's Laboratories. SPACs. Okay, so it's a SPAC. Of course it is. He loves these. Yeah. Yeah. I don't know. The chart looks promising. Like, it looks like it's in an uptrend. Studies, quick study. Moving averages. I just want, like, the simple moving average. This is going to be 9 days by default. Let's make it 20. 20. Okay. This is a 4-hour chart. We're going to go 1 year, 1 day. 180 days. Yeah. What happened to my other Studies, quick study. Okay, if I can't find this, I'm just not. Okay, I don't know why that dropped. Let's go here. But yeah. So RSI looks kind of good, like it's consolidating and kind of probably gonna do a move up. The chart looks alright. I would definitely say it looks interesting. If I liked the underlying company, then I would be okay with it.
Major hype train behind it after the announcement that Disney executives were partnering on the SPAC. I mean, it blew up on SPAC day. It blew up with media attention thereafter. Obviously, then we went into market crash period, and the stock plummeted in value, which was the perfect opportunity for me to buy.
Scary thing with those.
I got into this just shy of $11. It hasn't gone crazy again since then, but I'm happy with my purchase. I'm working on my fundamental analysis for this one as well. I would say my next big ones are Airbnb, FRX, and API. These are the guys I really gotta get my fundamental analysis in on. But you'll see that these are lower on my list.
Yeah,
we've got some big purchases over here on my really high conviction stocks. So sometimes I will make a position. I mean, to fall under 30, and when this.
Okay,
that's my entire. And these guys that I haven't done the research. GHVI, love this stock. So I've got probably around 600K in this stock now, and if I had to rank these by size of portfolio size so far, Redfin has the most here. Etsy's probably right at about $1 million. GHVI is probably about 600K. And then these guys that I haven't done the research on right here, the Airbnb. I've done initial research on these, just enough to feel comfortable with these. That's my entire position in these guys. These are sort of the new opens that I'm working on. But anyway, GHVI is probably about a 600K position. But anyway, this is got 118.8 in it that I bought just in dips here. I mean, this stock. I mean, it went down to like $12, and I'm like, I can't not buy it at these prices. Most of my purchases have been around $13.80.
It's a really scary statement to be like, this stock's so low, I can't not buy it. I don't. One thing that was funny, me and a friend of mine, that like another investor buddy, whatever, he's really like giving me a lot of advice as far as rental properties go, because he's got like twice as many as I do. But we both watched Kevin, and Kevin was on, he's on this millennial money thing that they've got going on. It's like him and a couple of other big finance YouTubers. And Kevin made a comment that he was like, yeah, I'm Kevin has a ton of margin. Like, he has a ton of margin, like so much so that it's scary. And he said, he's going to start paying down some of his margin. And to hear the guy that's sitting here like, man, I can't not buy at these prices. Like, to hear that guy who's super in margin be like, yeah, I think it's time we start paying down some margin. That's a scary sign. Like, when Kevin's scared, I don't even know about the rest of us.
Architecture, insurance, real estate, you name it. Matterport's coming, folks. It's coming for us. Okay, so then we've got Palantir. Oh, Palantir. 124K into Palantir. Such a lovely stock. Really building this position out. I refuse to buy this stock over $30. People were talking about being excited about this running to 38, and I'm like, oh, well, I guess I missed the boat. I held my discipline. I waited for this thing to fall under 30, and when it did, I DCA'd straight down as the market was crashing. So this one, I added a nice 124K. The existing position I have, probably in this one for about 400K now, which is awesome. Really do like Palantir. Very bullish on these.
A lot of
Neo, another 127K in. That probably puts Neo somewhere around 650, 700 for me. Love this company. I'm not sold 100% yet on the battery swapping, but on my deep dives, this company is a competitor. This company is not only a competitor, but it's here to stay. They often dip, depending on why. Anyway, $800,000 from me. So, I mean, this should really. I don't like this stock.
Yeah, he likes Tesla. He has a huge position in Tesla. That's for sure. Man, this whole like Roaring Kitty Gamestop thing. That was super interesting. This guy is so humble. Like, this is the guy that called the GameStop thing, if you don't know. But yeah, I mean, this is back July 2020.
Hey, what's up, folks? This is like an intro video to an intro video, like introception. You know, what happened was last night I recorded the tools videos that you're about to watch, and they turned out to be way longer than I was like I knew they were gonna be long, but they're like way longer than even I thought they were gonna be, and it's because I'm meandering and I'm
not gonna just like watch the whole thing, but yeah, like Roaring Kitty, like this guy, he seems like a very genuine guy, and like he's deep effing value. Like he's the guy fucking posting this. What is your? We'll see what his gains are at now. He does these like monthly updates. Yeah, like total gain 25 mil. Yeah. Right? I love this guy's channel too, dude. I was just showing like just one of his intro videos because he's so humble. Like he's yeah, just like a super humble dude who found something simple and now he's up like 25 mil. And it's just crazy. I wish he'd put out new videos. Let's see. Not most popular. Newest. Yeah, his newest video was a month ago.
Here's daily. Any of that. The best you can do is kind of assess the unique position a company might be on, the different levers they might be
His
able to
glasses
pull.
are great.
Different. This is silly that I'm even looking at that. I'm just kind of curious. That's all.
Like it's at $65, and like, yeah, dude. And the funny thing was like, he told the congressman guy, let me see if I can find this. Let's see, where is it at? All his speaking.
Estimating the prospects of GameStop's legacy business and overestimating the likelihood is preposterous. My post did not personally. Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
Okay, here it is. All right, I want to make sure it was the right
market
clip.
just as institutionals participate.
Okay, so actually the business channels have...
Okay, let me pause it. All right, so this is just like this. All right, I'll play the clip.
In the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock? And
for me personally, yes, I do find it's an attractive investment at this price point.
Quick question. Did you invest in GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals. Thank you.
I can't even process what that like payment for order flow had. Did that even make sense to you? Like, did you invest in GameStop because you weren't aware of payment for order flow? That sentence like doesn't even make sense. And this guy's a congressman. Like that blows my mind. But the point of that was that guy was like, "Hey, would you buy GameStop at $48?" And when he was like, and that was when it was down here at like 48 or whatever, like, would you buy it now? And deep effing value, he's like, yeah, I would. And the guy laughs at it. And then it's at like 270. That is hilarious. Like, oh man, that dude is a legend. Like, I feel like an idiot because I didn't just believe to the level that he did. Like, That guy though, definitely a whole another level of creature. But yeah, he's so humble, and now he's so rich. So I don't know, like, you doubled down at $38, net you $8 million. Yeah, like, on live TV in the world, he told people he thought it was a good idea, and less than a month later, like, they can't even be mad at him now. Like, the first time it was like, okay, there's this run up, like, maybe we could say something, but now, like, he went on record and said this, like, yep, I would buy more, and then he bought more, and it printed money, like 88,000% gains on this call. That is crazy. Yeah, I mean, that's what you do. But he doesn't put out new videos, man. This video has 1 million views.
Then The Wire.
But, like, this guy definitely knows his stuff, which was also interesting. Like, he's not just, like, your Joe Schmo. I saw a thing, like, he worked, he's worked for investment firms before. Like, he knows his way around stocks, which is honestly a good point for his channel. Like, it's not just random crap. Like,
let's call him over here.
He's actually like, his channel is a gold mine, basically. Like, even if, you know, you didn't get on board for the GameStop thing, like, there's a lot to learn here, and I definitely think it's a good channel.
Let's call him over here.
Wait. Oh yeah, that's another Roaring Kitty thing. But yeah, the GameStop thing is crazy, but it's kind of cool that now it's
to monetary growth. Now, we don't think inflation's going to be a problem. We do think a lot more people are going to be talking about it. And there are reasons to worry to some extent, but we think the productivity gains coming out of it, the explosive innovation we're seeing today, are going to overcome some of the problematic inflationary indicators we will see during the next year or so. On the fiscal policy,
part of their whole thing is tech is going to crush inflation. The thing with like, if you think about, like, this is like another point. If you think about iPhones, back when they first came out, they were really crappy and decently expensive. Now, for basically no money, you can get an amazing phone. So the price of phones has actually deflated as far as the tech you get for the dollar. So that's kind of interesting, and I think that's I've heard this before, which he's kind of saying is that we'll grow our way out of it. And we'll see if we can grow out of this inflationary period by just having tech companies develop our way out. But that's, I don't know. So these guys are super cool. This channel, they do quick stock analysis, and they have these like 8 pillars basically, and it's a fundamental analysis. It's very much so like what Roaring Kitty does, not just saying like, not saying that they're gonna pick winners like he does, but he focused on fundamental analysis. He didn't look at the chart of GME and say, okay, I want to buy in. He ignored the chart, and more or less, and he says that, he looked at the backbone of the business. And that's something I wanted to learn how to do more so because, you know, like, he had great success with it. So I'm like, that's a reasonable thing. Like, if I find a company that has a good fundamental analysis, find a company that has good fundamentals, then I can hold it and sell calls every month against it and just collect money that way. Like, that's my long-term plan. And it's basically, these guys have a pretty cool setup where they just analyze 8 different points of a stock, like 8 different parts of it. Like how much money is the company making, how much money do they have on the books and stuff like that. And decide if they think it's good or not. And it's a super cool channel, and they're pretty chill. So yeah, I was gonna like watch one of their videos and see.
Mentioning Johnson & Johnson, Paul, because is this one that Warren Buffett's always been in love with, a very stable company? Am I wrong? Like,
I don't remember him talking about Johnson & Johnson,
I'm just
but
stupid.
he could be. I don't know. Do you know, Mo?
I'm not sure, no.
Yeah, I'm not exactly sure on that one, but it seems like a company he would be interested in.
Head over to the Everything Money software and let's take a look at Johnson & Johnson. What is the market cap and dividend for this company?
Guys, this is a huge company.
Come on.
$428 billion company, 83 billion revenue. So PE, I'll have to dribble as an X. It's a 29 PE, but they have a great profit margin of 17.8%, so check mark there. Look at this gross margin, 60. This is software kind of margins right here, folks. So we have one X and one check. Now, because of the software being so awesome that if you don't sign up for $13 a month, you are stupid. It's going to show you everything here. Their free cash flow last year was 18.3 billion. They have a 2.5% dividend that paid out $10.5 billion, which means it'll show you right here. Do they have enough money to pay their dividend? Yes, they do in the last year. So these are just high-level things. It tells you 50-week high, 52-week low. By the way, for people who say that numbers can't fluctuate a lot, look at these highs and lows. Either way, 1X, one check to start.
Pillar number 3 is revenue growth over the past 5 years.
Revenue growth the last 5 years. 71.89, 82.58, check mark.
AMC is an easier buy than GME because yeah, it just you have to commit more to GME when you're talking about somebody investing like less than $1,000, or if you want to buy like 5 shares of something. 5 shares of GME is a lot more than 5 shares of AMC.
I'm willing to bet there was an acquisition somewhere in this area.
Pillar number 4 is profit growth, Paul. Now that we're all settled in and doing our thing, profit growth is pillar number 4.
16.5 down to 14.7, X there.
X for profit.
Yeah, profit's down from 16.5 to 14.7.
Shares outstanding, which is pillar number 5.
These numbers of shares are wrong, but the growth and the decrease is accurate. It is a check mark there. They did decrease by about 5%.
We are beta testing the Everything Money software, and our patrons will be beta. Paul, we're giving it over current.
$500 million, and current liabilities are 38.
But yeah, I think like just a basic fundamental analysis like what they do is just super good. But man, those videos are long and they like to hawk their stuff a little too much. So I think that could be a great channel, but let's see what's going on our Wallstreetbets. Are we still just gorillaing it up? Oh man, actually, what? WSB? Is that gonna work? Yeah.
Captain.
Oh, this is Sway. This isn't the real channel. That irks me. Oh, I guess
Captain.
It is what it is. This is an oldie at this point, but it's so good. AMC is your budget. Not many companies you can do FA with. I don't know how you do financial analysis with. What do you mean by there's not many you can do it with? Do you just mean like it takes a ton of time to do it on a company? Because that's one of my issues with it. There's so much time, and if you're like doing it against like 100 companies or whatever, like Roaring Kitty, we'll go with that. Like Roaring Kitty, like his videos are hours long where he's doing it against these companies, and he's got filters saying, you know, I'm only going to look into these certain companies. So like, yeah, it's a very long process, and it's a, you know, you've got to know your way around accounting as well to even do it. So that's definitely a thing. I'm going to roll this real quick.
There once was a stock that put to sea. The name of the stock was GME. The price blew up and the shorts dipped down. Hold my bully boys, hold. Soon may the Tendy Man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. She had not been 2 weeks from shore when Ryan Cohen joined the board. The captain called all hands and swore he'd take his shares and hold. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go. Before the news had hit the market, Wallstreetbets came up and bought it. With diamond hands, they knew they'd profit if they could only hold. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go. No deals were cut, no shorts were squeezed. The captain's mind was not on greed, but he belonged to the artist's creed. He took the risk to hold. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go. For 40 days or even more, the stock went up, then down once more. All gains were lost, it was looking poor, but still those traders did hold. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go. As far as I've heard, the fight's still on, the short's not squeezed and the gain's not won. The Tendy Man makes his regular call to encourage the captain, crew, and all. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the Tendy Man come to send our rocket into the sun. One day when the trading is done, we'll take our gains and go.
Yeah. I listened to that a lot, like the first week after the whole GameStop thing went down, and yeah, I just thought about that song, and I'm like, yeah, I like that song.
Meeting the prospect.
Man, yeah, just good God, man. So when was the last? You did March 8th. It's March. We're due for an update from good old Deep Effing Value. See how he's doing. His portfolio, like, excluding the fact there's one stock. Like, yeah, this is his GameStop thing, but like, that's it. Where are his other stocks? Yeah, it's a really good sea shanty. Like, that's what turned me on to the sea shanty songs. That may have been what, like, kind of popularized them recently. I don't know if that's the cause or the effect of that trend. But it's definitely a thing. I like the sea shanty songs. Man, Wallstreetbets, it's just gorilla. You spin on their true value, exposes fraud, despite the hate. Oh yeah, wait, we need some music. That ain't the song. There we go. This is better. Yeah. Well, you have a Discord now. That's super cool. Let's see if I can invite some more friends. One person. Stop there. Yeah, I don't know. We looked at GameStop, we looked at Carnival, I liked that. Who got beat up recently? Man, you got Google, Facebook. Actually got growth and value. Like, a lot of people are rotating out of growth stocks into value stocks, and that's what's been hurting tech so badly. That's still, let's see if I can. That's better.
You and I originally clashed.
Videos. What I've watched. Man. Okay. My history. Can I search my history? The other Kevin. Not me, Kevin. Oh. Man, everything has just been going up and up and up. It's scary. Like, where do things go? Oh, here we go. That's what I was looking for.
Hi there.
So my friend is a huge fan of what is this kid's name?
Mr. Wonderful here, aka Kevin O'Leary.
Okay, so yeah, Kevin O'Leary is from Shark Tank. He's actually like, I just think he's pretty cool. Like, he has a pretty good personality, and he seems pretty smart. And Graham Stephan is the kid that he's watching the video of. This is Graham. He's a YouTuber that's got a pretty substantial channel at this point, which is a finance channel. Yeah, 2 point.
What's up, you guys?
Like, basically 3 million subs. Of course, he's just got a car picture here. But, yeah, so my friend is in Graham's mentorship group. It's like $100 a month or whatever. And it seems pretty, like, he's gotten a lot of value out of it. Like, I'm not hawking his, I'm not even in his mentorship group. But my friend's gotten a lot of value out of it because there are some, like, options traders in there and stuff that are doing, like, 100 grand in trades a month and, like, making really good money on it and all this. So, like, it seems like it's pretty good, but it's really just a group that people are paying to be in. So I'm like, I'm not gonna pay to be in it. But anyways, like, I just thought this was kind of interesting. I thought it was a good guy for Kevin to evaluate, basically. So yeah, I'm just gonna roll it.
Today I'm going to have a look at a video I've never watched called Millennial Money, living on 1.6 million a year in Los Angeles. Before you start, smash the like button like I'm doing here. That helps the algorithm.
His green screen looks funny.
We'll see if I like it or not. You know, I like to tell it like it is.
I always believed that that I would be a millionaire, and I think originally my goal was like to try to hit that by 30. Ended up surpassing that by a decent amount. This is the moment. My name is Graham Stephan. I'm 29 years old. I make $1.6 million per year and live in Los Angeles, California. And welcome to, wait for it, Millennial Money. So I'm a full-time real estate agent, real estate investor, and YouTuber.
You know, I just started watching. I thought this guy's going to be a dick. But now as I'm just seeing the first few frames, it sounds like he's for real.
My mortgage is just over $2,800 a month. The market value of the other unit next to me is about $2,500 a month. Then between the equity I get and the tax write-offs from using the garage as my office, it basically works out to be a free place for me to live.
Okay, that's pretty shrewd. This guy knows what he's doing. He's basically bought 2 properties and he's using the tax code fairly and legally to try and live in his place for free because he's profiting off the amount he's getting on rent after he services the mortgage. Good idea.
Yeah, that's called house hacking, which just about everybody talks about. And that's definitely house hacking done right. Like, and it's awesome because it's like an expensive property, and then it's paying itself off using the apartment next door. And yeah, another thing though, my friends like keeps up with Graham Stephan and what he's doing, and he's been moving. I think he's moving to Nevada. He had a video that was like how I gave myself a $400K a year raise because he's selling out in California and moving to Nevada because I think it's Nevada or Arizona. If I get the state wrong, that part doesn't really matter. He's moving out of the California taxes and moving into a state that has way lower taxes, and that's going to save him about $400K a year. So that was his moving into my free house video. because the house is like $400K and he's going to pay for itself in a year just on tax savings. So that's kind of interesting. But yeah, this house hacking thing, definitely cool. All right, sorry.
So I spend about $200 a month on groceries, and I do price shop between grocery stores. I'll kind of make the rounds and just stock up on whichever item is the cheapest at which store. Every morning I have my same 2 eggs with ham and cheese and half a bagel with store-bought generic brand cream cheese is my favorite to do that. I refuse to spend money on 2 things. Number one, I think everyone knows, is coffee. I think it's absolutely ridiculous, the markup of coffee at Starbucks and Coffee Bean and a lot of those places out there, so I just make it at home for 20 cents.
I love this guy. This is exactly what I'm talking about. He's not an idiot. He knows exactly what he's spending his money on. He's got it graphed out. He's very, very conscious of not wasting a single cent. Nothing wrong with that. That's very smart. Coffee is a big money waster. You get really hosed when you buy it.
Also, designer clothing. Don't see the point in going and spending $700 on like Gucci shoes, so I end up saving about 99% of my income just because my income is so high and I keep my expenses so low, and most of the properties just kind of like pay for my living expenses, so anything else I make is really just seen as a bonus, and I save and invest it.
Now, the one thing I would disagree with him on is, you know, buying really cheap
Clothes.
I'd rather say, look, that's okay for jeans and a t-shirt maybe, but every once in a while, buy a spectacular piece that's going to last you your lifetime. I like to buy great suits. I want to look good, but I don't waste money. All my suits are the same. I just have 25 of them. They last forever. All right, you got it?
Can you watch the whole thing?
Oh, there's more? It's Graham as a realtor? That's the same thing?
It's like a 10-minute video.
Got it.
Oh, yeah, if you wouldn't mind subscribing to the channel, that would help. I'm just going to throw that out there. But yeah, it would really help the channel out. I'm trying to grow, and yeah, you've been hanging out with me for this long. I didn't know if you'd actually subbed or not, like, or thought about it. But yeah, that would help, and I would really appreciate it. And then yeah, next time I do this, we can hang out again. So that was just something I was thinking about.
So I got into real estate basically as soon as I turned 18 years old because I had no other options. I didn't get into college. I had really bad grades in high school, and I saw getting my real estate license honestly as a way where I could just get 1 year of work experience and then reapplying to colleges. But it turned out to be a career I really loved.
Ah, you
So
a
I ended up
bro.
living
I
with my dad
appreciate
for
it.
the
I
first few
appreciate
years.
it.
I moved out in my early 20s, and that was when I bought another property.
This guy's living proof you don't need secondary education to make it. I mean, you know, everybody says you got to go to college. Look, I'm not against going to college, but it is no way a prerequisite for being successful. He's living proof.
The first property I bought was when I was 21 years old. It was a short sale for $59,500 in San Bernardino. It was a foreclosure that was being sold by the bank. And at the time, I had been saving up as a real estate agent.
He bought a $60,000 house in California. The rest of this, that pretty much, like, if we could have done that, we could have skipped all the other hard work. But yeah, that's a big thing. I'm sure Kevin's about to latch onto that.
Using all of my commissions, just putting it in a savings account. I bought that property in cash. It actually appraised and was refinanced for like $260,000.
So he took advantage of dislocated market. 2007, 2008, some part of 2009, housing had been crushed. He took advantage of that. He bought it out of foreclosure from the bank. Obviously, it was a great trade. You can't do it all the time, but he was able to do it because he'd saved his money.
My investing strategy really hasn't changed since I was 21, and all of it has really just been about real estate. If anything, I'm just looking to buy more expensive real estate now that makes a little bit more money, but otherwise I've just kept doing the same thing over and over again.
Nothing wrong with doing what you're great at. That's clearly what he's doing here. Graham is focused on real estate, bringing in about $15,000 a month. But here's what you should be doing while this is happening, because real estate is just one sector of the economy and goes through cycles too. If you're investing, diversify out of real estate. Now, obviously, it's hard for him to do that because he wants to keep buying more houses. But it's very prudent sometimes to put something aside and just buy the overall market, an index or something, so you get diversification of your net worth. Because when real estate slows down, you have other investments that can continue to perform.
Which, that's why I bought into where's it at? VT-SAX, this Vanguard Total Stock Market Index Fund. I recently bought like 3K in that. I've got like 30 of them. And yeah, because I've got a bunch of money in real estate and I wanted to try to diversify into stocks. And as much as I like picking random stocks, just throwing money at a managed fund it seemed like a safe bet. So I'm definitely doing that to try to start diversifying because I'm like 98% real estate. And it would be nice to have some diversification. His 3 channels now.
I had no idea that anyone would actually watch me, and I had no idea that I could actually make any money doing this, so I started it really just with the intention of having fun. I'd always wanted to do it, but I also felt like, who would want to watch me? And I felt like I didn't have the personality for it, and I just felt like, you know, I should probably post.
Real estate can be expensive in Canada. It depends on. It's
and I just filmed with my eyes.
It's like a hyper local thing.
Just talked about how I got started in real estate, and that was such a fun experience. And I remember that video getting like 9 or 10 views, and just being like, oh my god, like 9 people have seen this video. So I started making more videos, and once I started doing about 2 videos a week, just the growth really just exploded. It seemed like.
So he's really figured out how the algorithms work and how to produce content that people want to generally check in on every week. And when you have 1 million subs, you basically have a business. You're a broadcaster. That's what you're doing. So
yeah.
He really has figured that model out. Kid's a hustler.
So right now, probably like 85% of my income is affiliated with YouTube in some way or another, and then the remaining 15% is through real estate sales or real estate investments. So since I've always been self-employed, I've never had a formal like 401k, but I do have a SEP 401k. I've thrown some money in there at the end of the year, just if it's left over, just as a hedge. But then as far as savings are concerned, I always like to keep about $20,000 to $30,000 in one of my checking accounts, just to cover anything that could come up.
That's a play at Dave Ramsey. I don't know if you've seen Dave Ramsey, but he's like a radio show host that people call in when they're like, I'm 100K in student loan debt and I make 40K a year. What do I do? I just bought a 100K car as well. And like Dave helps them figure out how to get out of the hole. But that's the little
about $20,000 to $30,000 in one of my checking accounts, just to cover
safe
anything that
right
could
there.
come up in the short term or to draw from if I have any expenses that come up. But other than that, all of my other money is spread out through several high interest savings accounts.
His monthly income is 150 grand. You know from before that he told you 15,000 of that came from his rental income. This kid is a YouTuber. He's making the majority of his income running a broadcasting facility. That's the way you should look at it. That's a big number for YouTube. You can only do that if you have 1 million plus subs, and he does. That's extraordinary.
Yeah, and then they talk about his hobby. He likes collecting old bills.
Very much like it gives you a little jolt there.
So I bought my Tesla in April of 2019. You get through pocket.
He basically bought a Tesla. He made a video about buying the Tesla. The video got so many views. It was, it paid for the Tesla. Like, with 1 million subs, that doesn't surprise me. And, like, Kevin, pointed that out. Like, this dude, he's a broadcaster. And, like, that's kind of my thing. He talks about being a real estate investor. And, like, that's the whole first half of this video. It's like, I'm this real estate investor that saves my money. Oh, yeah, I make, like, 15 times that in YouTube. But I'm a real estate investor. Like, and that's because that's his YouTube personality, is a real estate investor, finance professional. And, like, because Graham Stephan doesn't want to be a YouTuber, he wants to be a real estate guy that has a YouTube channel. Even though his finances, if you look at his financial picture, is he's a YouTuber. And yeah, so that's definitely a thing. There was another. I'd gone to my history to find this. But yeah, okay, never mind. I thought there was another good Kevin one. CNBC Make It is what these are. Search? Can I search for Kevin? Because that's the only person here I care about. Dude, don't make these common money mistakes. Let's see. Oh, it's him talking about her.
Kevin O'Leary.
I think I liked this one. He talks about this.
So let's roll this thing and see what the story
There's
is.
some pretty good, like,
50
life
days
lessons in this.
It's not even possible.
It's going.
Oh, sorry.
New York City is pretty expensive, but I think if you know where your money's going and you recognize what your priorities are, it's totally doable.
That's before tax. She's not really making $50,000 a year. She's probably making about $40,000 a year, real cash dollars. So she's living off a lot less than 50.
I feel like I've had a lot of different influences about money, negotiating, 401k investments.
Not bad. She's got savings in here. I'm looking at a pie chart. The latest typical monthly spend, $28.94. Food $340, transportation $145.
It's incredible she's
Debt
still
repayment,
saving
$130. See how much
$800.
that is? That's a chunk. And then miscellaneous $420. Ooh. Okay. All right. But the savings $880. I like that. I like that. I want to see if she's investing it in the long term, because that's what you're going to need to end up with over $1 million by the time you're 65. Because you got to get market returns. They're sort of like 6 to 8% a year over a long period of time. That's what they've done. Market
Why not just say 7?
But if you can get those market returns, it's good. But you got to invest.
I like to divvy up things depending on percentage. So immediately after my paycheck comes into my bank, which I use Ally, it just goes into the savings depending on how much I want. I tailor my lifestyle towards not having that money because I'm just used to it.
Okay, the kid's smart. I'll tell you why. If you actually have targets, in other words, you're putting percentage spends and you can watch it on a weekly basis or every 2 weeks, because you're probably getting paid every 2 weeks, that's real smart. Because the way you go offside and end up with massive credit card debt is that you don't stay within those guidelines. So she's got a pie chart and she's saving, for emergencies, classes, gift donations, and travel. That's very smart. The one thing I don't see here, which is incredibly important if you're 23 years old, is you got to put $100 aside every week for the long term. In other words, you're investing in your retirement. Minimum $100 a week. So we'll see if she's got anything like that in here.
So, one little point there, the whole, we paid off the house I lived in before this one in July of last year, and I paid it off in about 2.5 years. And yeah, I threw a couple of chunks at it, but what we did from day one was we doubled the mortgage payment. So the mortgage was $1,000 a month, and it was a 15-year note. And what we did was we did $2,000 a month. And I just went ahead and, the beginning of the month, I got paid $2,000 at the mortgage. We live off the rest. And we basically, we just buckled down and we did that. And we didn't have super nice things, and we could have lived, $1,000 extra a month. So we could have definitely had a better lifestyle for the 2.5 years or whatever it took to pay off that house. But as a result of that, we paid it off. We turned it into a rental property. It actually had a 1-bed, 1-bath apartment behind it. So not only were we paying double the mortgage out of my paycheck, we had a rental property behind it generating $500 a month for the 2.5 years we lived there. And that all ended up with, in July, I was able to pay off that house completely. And now the front house rents for $1,000 a month. The apartment behind it rents for $625. So that's $1,625 a month. And then the mortgage on the house I'm sitting in is $2,000 a month. So that house actually pays for 3/4 of the house that I'm in, which is super cool. But what we're doing here is we're not able to double this one. But what I'm doing instead is I'm taking that $1,600 a month that I'm getting and I'm just investing it. So yeah, that house technically pays for 3/4 of this one, which makes it a lot safer for us financially. But I'm still just investing that money instead of living like we did. So we were paying $2,000 a month on that mortgage. So now we're paying $2,000 a month on this mortgage. But now we've got that extra $1,000 a month that was opened up because we moved out of that house. That's just going into savings now. So we bought a new house and we're saving an extra $1,000 a month thanks to the last one becoming a rental property. And that was only made possible because we lived off of like peanuts for 2.5 years. So then I was able to buy this house. Like, I live 3 blocks from the beach. I love my new house. It's amazing. But without the rental properties I have, it wouldn't have been the safest thing in the world to move into the house I'm in now based on my current salary. So yeah, definitely, like, I engineered where I'm at by paying extra on my mortgage. And if you use a mortgage calculator to calculate, like, paying extra, because, like, if you pay on your mortgage, you'll end up paying, at the beginning of the loan, you're going to pay like 60% of it's going to be interest. So if you pay $1,000, you know, $400 goes to principal. Well, if you pay $1,400 instead of $1,000, that $400 becomes $800, and you're paying your principal off twice as fast. So there's like this kind of compounding effect, because as you pay the principal down, the interest gets lower, and you know, it's a very boring topic, but the more you pay down on the mortgage, the easier it becomes to pay down a mortgage. So you'll see all of these videos that are tricks on how to pay your mortgage off faster. The trick to paying your mortgage off faster is just throw extra money at it. You will have to pay you'll have to pay less in interest. It'll get paid off faster. So they'll tell you all kinds of fancy ways to use credit cards to pay it down, and then pay off the credit card midway through the month. Don't do any of that crap. Just pay extra money on your mortgage. You'll pay it off. And then personally, every house I've lived in the last like 6 years has turned into a rental property. And then I've bought more rental properties outside of that. So yeah, that's just it. Like, just pay down on mortgages. Basically, you end up with options. And I love options. Yeah, like Google mortgage early payoff calculator. Let's see. So 100. Sure. Let's see. This may not have been the calculator I was dreaming of. 3% continue. So you payoff result. Okay, so extra payments a month. So, let's see. It doesn't even tell you what your original payment's going to be, which is what I was looking for. But if you pay an extra $1,000 a month, calculate, literally your 30-year mortgage gets broken down to, what is this, like less than 7 years? Like, by doubling, that's probably a little more than doubling. Mortgage calculator. I know Google does its own thing here. Yeah, same. I think I plugged in 4%. Interest rate. I probably put 4%. But anyways, yeah. So your payment's like $500 a month. But if you change that $500 to $1,500, you pay your house off in 7 years instead of 30 years, and you save $40,000. You end up paying $10,000 in interest instead of $50,000 in interest. This is why I paid my house off in 2.5 years instead of like 30 years, because you save so much in interest. There is merit to say, like, the house I'm in now, I have like a 2.9% interest rate. So I'm not going to pay this house off faster, because that money would be better spent in the market or literally anywhere else. But when you have like a 4 or 5% interest rate, you're way better off paying that off, because it's a guaranteed return on that money. So that's just something, like, just throwing a little bit too. Like, it doesn't even have to be 1,000. You throw an extra $200 at your mortgage. Say your mortgage is $500 and you pay $700. You like almost half the time. Like $250 is probably like half. Yeah, that's like 14.6, whatever. That's like almost half 30 years. Like you pay your house off just for an extra $250 a month. It's crazy when you start doing these early payoff calculators how much, or like how far a little bit extra per month goes, because it compounds. This same compounding effect is why retirement accounts are so successful, and why you can put $10,000 in a retirement account when you're in your 22, and then basically retire off of that $10,000 when you're 60. That's just, oh yeah, this is Dave Ramsey. Like, we were talking about Ramsey earlier, but yeah, so definitely support paying your mortgage off early. It gives you a bunch of options. Or even just, you get it sort of paid down and then you get some money from something, and then it's possible to pay it off even earlier. When it's a big number, you can't really do anything about it. Like when my mortgage was like $130,000, I was like, well, I can't really do anything about that. But then I whittled it down to like $30,000, and I had then I was at one point my savings just got bigger than the amount the mortgage was outstanding. I think I got to like 45 or 50 in savings, and I was like, wait, 30 on the loan, 50 in savings. Okay, I'll just get rid of that. And then I had 20 grand in savings and a paid off house. And the grass is greener when the house is paid off, I promise. That may sound stupid, but it feels so much different. Like you. Okay, sorry. You said a lot. When we think about real estate in Canada, I should definitely diversify. I agree with definitely misleading. Yeah, I remember I was reading this when you were typing that. Put it all into mortgage. Oh, the rental part is a nice bonus. It will get faster. With rentals, what's the return over the long run? Like you own the house already, plus now neglecting the interest that was paid. So with rental properties, the big thing with rental properties, like, so I have a house right now that has a mortgage payment on it for $550. Like it's like $563 or something, but like $550 a month. And the tenant is paying me $850 a month in rent. So I get an extra, like, I get $300 a month in cash flow. That's just money that doesn't go to the bank. And I put that in an account, and I have an emergency fund, and then I just invest the rest. I definitely have to keep a higher emergency fund based on how many properties I have. Back in the day, I had like a $3,000 or $4,000 emergency fund. Now I don't like going below like $20,000. But when you've got like 6 properties, if an HVAC goes out or a roof needs replacing or something, I don't want to be taking out some crappy loan to do it. I want to have some cash on hand, and I've got some of that in stocks. Yeah, it's just kind of, anyways, the usual thing that people say is, you need to have, you take X amount of dollars per month and put back for the property for maintenance and stuff. But what I basically do is just say, hey, I make this much extra, and I put that towards investing, and then I make sure I have an emergency fund in place. But, yeah, so that house, it has like I think that's a 30-year mortgage. No, it's a 15-year ARM, actually. Yeah, it's a 15-year mortgage that every 5 years the interest rate will adjust. So that house will pay itself off in 15 years and not 30, which is, yeah. Anyways, I'm selling a house right now, and when it sells, I'm planning on paying that one off. But that one in particular, yeah, that's kind of, it's paying itself off. I've got money going like every month that goes towards me being able to buy another property. The house is appreciating in value. Last year, house prices in the U.S. went up by like over 10%. So I bought that house. That house was a thing. Like I bought it from auction.com, and right now, due to due to the whole coronavirus thing, people aren't able to foreclose. So there's not a lot of inventory. Auction.com is for, and this is, you're in Canada, so I don't know there. This is where I used to live in Mississippi. I used to live in Hattiesburg, Mississippi. And these are foreclosed houses. And you can get houses that are in like disrepair, basically. Like this is a good example of a messed up looking house. Where is this house at? Sorry, this is kind of in a size south 20. This is kind of a rough side of town, so I wouldn't personally be buying this house because of where it's at, not because of the house. But you find these houses that are in a rough state, and then you bid on them at auction. So the house that I'm referring to that is $850 a month in rent or whatever from the tenant, that house I bought for $35,000 and I put about $8,000 in work. So then I'm like 43 in, and I had it appraised at 85. And so immediately, like in a 3-month span, I bought a house for 45,000 ish, a little bit less than that, and then it appraised for 85. So I created $40,000 out of thin air. So that was a super good deal. And after it appraised for 85, I borrowed 64. So I actually walked away from the closing for the refinance with $20,000, which was ridiculous. I still, and I used that money towards the next house that I bought, because I bought the next house for like 43 in cash. So that was kind of a thing. So, but like that house is like, I bought it for 43, it appraised for, and now it's probably worth 100. Because prices have gone up since, that was all 2019, somewhere 2018, 2019. And then prices have just gone up significantly since then. And so not only did I buy the house for 43 and it's worth 85 and now it's like 100, but the house itself is paying that money off for the loan because I took 64 grand out. So that is being paid for by the tenant. And yeah, I mean, that's the thing with real estate and rental properties. Like, they're super good. You just find some rundown house that somebody's not willing to fix up, or a bank got the house. Banks aren't in the business of fixing houses up. Banks get broken down houses and they want to get rid of them. So then you buy their broken down house, fix it up, and then turn it into a rental property. Or what I could have done, I could have bought that house and done all that and then sold it for 85 on the spot. Like, I could have done that all day. But it took me 6 months to actually get that house. I knew about the house before it went up for auction, and I was following it. I called the bank. I did all kinds of stuff like for like 6 months leading up to that. I didn't just luck into that particular house. I mean, I got lucky in the end that I won it. But the point there is it wouldn't have been super easy to repeat, but that's what house flippers do. They'll buy a house just like that and then sell it for 85. But instead of selling it for 85, I turned it into a rental property, and now it's worth like 100. And I've been collecting a check for the last like almost 2 years now. So that's why rental properties are so great, in my opinion, is that you can just do that. And you can rinse and repeat it. I mean, that's one of my properties, and I've got 6 rental properties. So like, it's just kind of it's just a thing. I don't know. I enjoy real estate, but it's been really hard now with the whole coronavirus thing and banks not being able to foreclose, so there's no inventory. So like, there just aren't houses to buy. And prices are kind of crazy right now. So it's, because I don't mind buying a house for $85,000 that'll rent for $1,000 a month. That would be cool. You get over a 1%. There's this like 1% rule. You don't want to buy a $100,000 house that rents for $800 a month. You want rent to be 1% of the house value. But right now it's getting pretty tough to find houses that are in the 1% rule because of just how house prices have gone up. And so that's where I'm kind of diversifying a little into the stock market until maybe the real estate market cools off. But if the real estate market doesn't cool off, I guess I'm gonna keep looking for good deals. But until they stop all of this like moratorium on evictions and basically temporary rental protection because of the coronavirus, I can't really buy houses at reasonable prices. But I feel like when that ends, we're going to see a bunch of foreclosures, sadly, and then we're going to see a bunch of auctions for those houses at really good prices. And that's where I'm going to go back into buying real estate. But I've kind of put buying on hold until there's more houses to choose from, because I don't want to buy one of the 3 houses that are for sale. I want there to be like 15 houses for sale, and I'll pick the best one of those. So that's kind of a thing. But yeah, I guess we can go back to listening to him talk about this chick who lives on $50K a year.
$100 a week. So we'll see if she's got anything like that in here.
I graduated from Ithaca College.
Ouch. She starts with $16,000 in student loans, which reminds me, if you're going to burden yourself with a loan that you got to pay back at probably 5 or 6% interest, because that's sort of the going rate on student loans, which is a huge interest rate these days, when the 30-year bond is yielding less than 2%, that's very, very expensive. You want to make sure you're investing in an education you can get paid back on. Like, go to college for something you know you can get a job in. I've said.
So the first thing he talks about is that 30-year bond, which goes back. That's that yield curve right here. He's talking about this. Yeah, and right now it's at 2.4. It's just been going up, man. It's gonna get harder and harder to buy houses.
This countless times. There are 3 good categories to focus on: engineering, engineering, and engineering.
He recommends your degree.
For a 4th choice, go with engineering.
I had a lot of part-time jobs throughout school. I'm really fortunate that I didn't have a lot of student loans. I had a lot of scholarships, and my family helped a lot through college.
Very smart to do part-time during school. That reduces the debt. Very smart. It lets you actually have some cash flow. I did that too. I actually was a waiter, and I worked at night, and I worked in the record store, whatever I could do in college to keep my loan down, or even pay off some of it while I was there. I'm starting to think Elena's got her poop together, so to speak.
I think it's really important to get a jump on
Way
it.
to be politically correct.
I still want to budget for it and get them paid off in the next 5 years.
Okay, paying it off and having a plan is very smart, because I'll tell you, while you have that loan, you're paying interest. That's an expense that's brutal. So she's got a plan to pay it off in 5 years. Very good. I like that.
I feel like dating as a young person is pricey. I mean, as much as I hate to say it, it's a little helpful that I am a lady. So usually if I go on like some first dates, I don't usually have to pay. I'm happy to. I honestly am. Like, sometimes I pay tip.
Truth, man. Truth.
First date, you don't have to pay? Yeah, okay. But eventually you don't want to become in debt to that guy unless you think there's something there. So I've got the 3-date rule on that thing. You can go up to 3 dates and let him pay every time, or let the other significant pay. But once you're past 3, I mean, you know, the only reason you go out a 4th time is you know, you're trying to light the flame, and then you got to become a participant in the cost. You're gonna kind of go 50-50. I don't think it's cool that no matter who you're dating, that you let them pay for everything on the 3-date rule. So you can let them invest in you for 3 days, but 4th, you got to pony up. Just saying.
I also am on a bunch
Pretty
of
good rule.
email lists and newsletters that give you free events. How long have you lived here?
Almost 5 years.
Oh, okay, nice. Like, I'm actually friends with my neighbors. Like, I'll tell my friends, like, oh yeah, like I baked a cake with my neighbor, or, you know, I went over to their house, and they're like, you know who your neighbors are?
I'm starting to like this gal. I'll tell you why. She's thinking about all the things she can do that she doesn't have to spend money on. She's staying hip to what's happening in her local neighborhood. She's talking to neighbors. She's on social. She's seeing what events that are around her are free. Very smart. In New York, you have to do that. New York is so friggin' expensive. Of course, the city wants to suck every dime they can get out of you, but at the same time, people are hip too, and they're doing their own things.
So, like, with my hair, I honestly cut it myself, or like my mom does it. Like, and that's just because I have pretty simple hair. Like, I don't need anything super wacky.
She cuts her own hair. So do I. You gotta save. You gotta save. You know, I have a little less to cut, so it takes me less time. That is really smart. Beauty, you know, is Everybody wants to look as good as they can. In some ways, it's important that you do that. But if you can minimize the cost, that's really smart. And hair is really expensive. She's young, she's 23, so she doesn't have to dye her hair. That's coming later, very expensive. Okay, this is the part I'm really interested in. What is the retirement plan? She has one, so let's hear what she's doing.
So I have the 5% and then my company matches it.
Okay, she has an IRA, the company matches it. You must take advantage of that. If you have a company that's giving you dollar for dollar, you have to do that. That is like free money coming out of a helicopter to you, and you have to do it. That's one of the benefits of being employed, particularly if the employer wants to help you build your nest egg. That's really smart and very, very important.
If I get a pay increase, I definitely want to up that. For the company to put in money, like that's free money. Like I don't know why you wouldn't max that out if you have the financial means to. So that's really important to me.
She's got $2,000 in Robinhood, that's great. I prefer Bean Stocks, that's the financial literacy platform that Mr. Wonderful's investing in. I'm really big on this whole thing. We teach everybody everything in high school, but we don't teach them about investing, and of course they end up in debt when they get out of college. Not Elena, she has been way ahead of this game and now has $2,000 put away. I like that a lot.
I do freelance photography on the side, mostly headshots and portraits.
Whoa, I like that. I'm a photographer too. I think that's really great. And also, one thing I was going to say about your life is, if you're really interested in pursuing a career, whatever it is that you found that you're passionate about, that's good. But business is binary. You either make money or you lose it. In a career, you're always trying to help the company you're working with move forward. But it's great to have a passion in the arts, which is chaotic. But it really helps you be a balanced person. She's into photography. I'm looking at some of her shots. Pretty good.
I think it'd be nice to make over 100,000, and I definitely want to hit that by 30. I know it sounds kind of ambitious.
Very, very good to have a goal in terms of what you want to have as an income. $100,000 a year in Brooklyn is a good number. It means basically you're keeping about $75,000, or significantly more than she's got now. Let's say after tax she's only got $40,000 free cash flow. If she got to $100,000, she'd have $75,000. She could maybe even buy a condo at that point and put it.
That's pretty much why
she's building equity.
the stock market works, because people are creating things.
On a regular interval, you're asking your boss for a raise. You don't get one unless you ask, by the way. You never get one unless you ask. I've been doing this a long time. People ask me for a raise, it's because they feel they deserve it. She feels she deserves it. Very smart.
I think if I make the right career jumps and I stick with my side hustles, it's definitely doable. I would want to donate some of it. I'd want to use some of it.
That's pretty much how the system works.
Buy more camera equipment, and then a lot of it I just want to put to the side. All the small things.
You get paid the least amount they can pay you for all of your hard work.
It would be nice to have that little perk later, but I think in general my budget will still be pretty similar, even if I get a pay raise.
Okay, here's what I think. She's still got a bunch of money on that student loan she's got to get rid of. That should be the primary focus. It's better to pay off the debt before you put a significant amount of money into investment, because investments can go up and down in value. As we all know, the stock market has volatility. But
we really know
still
that
have
now.
Debt, that's forever. And that debt is for certain going to charge you interest. So in a way, when you pay down your student loan, you are investing in yourself. You're getting rid of it. You get that burden, that shackle off your back. What I see here is she could probably get rid of that debt in about 36 months if she just focused all of the energy she's got into little things towards that debt. And she'd save a fortune long term, because 6 or 7% interest, that's nasty. Now, it's not as bad as credit card debt at 21, but it's still a lot. You know what I'm going to give Elena on a 1 to 10? I was impressed. I was very skeptical at the beginning, but I'm going to give her an 8.2, and for me, that's a huge score. I'm not kidding. She's doing a lot right. The only reason she's not getting a 10 out of 10 is she's not paying off her student loan fast enough. Thanks for watching, and don't forget to subscribe to CNBC Maker.
I think Kevin's really smart. I mean, obviously he's got money to show for it now, but like, he definitely seems pretty smart. What is this? This is a roaring.
What's up, everybody? You may have heard me mention in a separate video or on the live stream that sometimes my decisions are based on feel. That it's really difficult to explain like why I bought or didn't buy a certain stock.
It's a really nice
in this video, I hope to show you what I mean by feel. All right. So let's say I'm looking at a stock, right? Let's just pick a random one, Penn National Gaming, okay? Ticker PENN. Let's say I'm looking at that company and I'm not quite sure whether or not I should buy the stock, right? What I'll do is when I'm unsure, I'm going to refer to my trusty Uno deck, okay? My Uno deck. And I maintain 2 piles at all times for times like this where I might be a little bit unsure what I should do. So what I'll do is in the first pile, when I'm drawing, I got to draw from the first pile first. So I'll show you the cards here. This is just numbers, right? It's just numbers in this first pile, okay? 2, 4, 6, 8. In this case, there's odd numbers in an Uno deck, but the odds are for the suits, okay? I like to keep my life easy, keep it simple. I'm just working with even numbers. So I just draw a card, keep it real easy, and we'll just say 6. Okay, so I'm going to be buying 6,000 shares of Penn, right? Hold on. There's a second deck you got to draw from. Okay, now, okay, so this is the question now, 6,000 shares of Penn, but now, just some additional variables we need to take into account. I'm going to draw from this second Uno deck here, and I'm just going to show you all the different cards that are in this deck, so you can see the different possible outcomes of this decision process. So the first is this. You know what this means. If I'm drawing this card, that means it's just telling me, don't buy it, move on to the next one, right? Simple stuff. Then there's a couple of these type of cards, like +2, +4. It's just saying, just buy an extra 2,000 or an extra 4,000 shares. That's all that's saying. Real simple stuff, right? Then we get to this one, right? The reverse. You know this card? This is the reverse card, right? This is effectively a reminder for myself of, like, if you're really not that sure whether or not you're buying the stock, man, if you're not sure, and there's a little bit of ambiguity there, like, don't force it. I mean, it's saying, like, don't coerce, reverse. So what I do is, if I'm looking at Penn, P-E-N-N, I reverse the tickers. So then I start looking at N-N-E-P in this case, and I say, all right, that's the ticker I'm going to buy instead.
Thank you. Now I know how GameStop got selected. That's just something.
You know, it's really tough to peg numbers and nail them to the cent.
This video is like, how much should you have saved by 33?
But here's one for you to think about. By the time you hit 33 years old, you should have $100,000 saved somewhere. Make that your goal. 33, 100,000. You can do it. I'll tell you how. You save 20% of your paycheck, and you let the market grow at 5 to 7% a year. You can get to $100,000. Everybody says, oh, that's impossible. I can't do that. Yes, you can. If you don't have it by 33, I'll give you the 35. I'll give you 24 extra months. That's why they call me Mr. Wonderful. Why 33? 33 is the tipping point. It's the point in your life when you really have to focus on saving money. If you haven't saved anything by the time you're 33, you're way behind the 8 ball. Your goal should be to try and amass at least $500,000. So you start to chop up the decades you're going to work. By 33, you better have 100K if you're going to get the other 400 by the time you're 60. Think about that.
Wait, I'm confused.
Dollars.
Did you just say you only need 500K to
anything
retire?
By the time you're 33, you're way behind the 8 ball. Your goal should be to try and amass at least $500,000. So you start to chop up the decades you're going to work. By 33, you better have 100K if you're going to get the other 400 by the time you're 60. Think about that.
Why does... Because, like... Oh, wrong button. Wrong button. Oh, that's 5,000. If you take... This is why that doesn't make sense to me. So if you take 5,000, 500,000, and you take the safe withdrawal rate, which is 4%, this is like what you can withdraw from that, you get 20K a year. So he's saying you can retire off of 20K a year. I don't really understand why that's the goal. Like, my personal goal is 2 mil. Not 500K. So that's super weird. Does anybody... No, they're all just saying, oh, I have this much money. Can I go da-da-da? Yeah, nobody addresses that. Like, why 500K? That's such an arbitrary number. If I rode the GME train. Yeah. That GME train, man. I felt the same way about the Tesla train last year. I had a Tesla option that would have printed really good that I ended up selling, and then Tesla just did crazy stuff. So I'm like, I don't know. That's something. Google Ethereum price 1900 Bitcoin. Almost 61. It actually was 61 earlier, so it pulled back, I think. Or am I crazy? Yeah, it was 61 earlier. I thought so. Yeah, crypto's doing good. Crypto usually does good on the weekend. Like, I've noticed this. Like, usually the highs are on the weekends. I think people just get bored and want to do something over the weekend, so they buy into crypto. But yeah. Alright, well, it's been fun hanging out. I'm going to take off. I appreciate you joining me. Yeah, and also appreciate you subscribing and joining the Discord, actually. That's super cool. We'll try and make that Discord a thing. I'll start, like, plugging it in the videos and see if I can get some people to join. It'd be cool to have a group of people to talk about stocks and stuff like that with. That would definitely be a cool thing to build up. And just kind of a chill place to hang out. But yeah, I appreciate you sticking around and having someone to talk to. But that'll be it for now. Yeah, thanks again. And any of the other viewers, if you haven't subbed, I'd appreciate it. It helps